The improved economic data that we have been seeing of late, whether it's jobs, whether it's in other pockets of the economy, to what extent does that remove some of the urgency from the stimulus talks? How much does the stock market versus the bond market depend on those benefits getting extended?
Sure. Well, it's really interesting to watch what's going on right now. I realized the other day that when you look at things like credit spreads, historically those are driven by the economy. But the market has turned everything on its head and said, well, now the Fed is controlling credit spreads, so that must translate into economic activity. Actually, credit spreads on corporate debt don't really mean much to Main Street, and the stimulus is what really matters. So the lack of progress in stimulus, which I don't think we're going to get anything until September at the earliest, which means stimulus checks won't arrive until October, and maybe even the extended unemployment benefits won't be solidified until then. We're leaving ourselves exposed to an air pocket, and I wouldn't be surprised to see the August economic data and the September data to be, very disappointing.
Compromise, right. Now, speaking of stimulus, I know that one thing you believe Congress should take up, one measure that they should really consider is a payroll tax cut. But this is a bit of a political quagmire. It's kind of loaded because President Trump has been pushing for something like this even before COVID, and it makes it a little bit politically untenable for a lot of members of Congress. What is your view here on how the administration and Congress should proceed with a payroll tax?
Well, I think first off, the real test sits in the Senate, because the Senate is the place where we could actually get this kind of discussion rationalized. But my view on the payroll tax holiday is it would be stimulative for the economy. It would probably add 2 million jobs to the economy. I'm in favor, though, of a period of a payroll tax holiday, which is voluntary on the part of participants, which in exchange for getting a holiday on the payment of their payroll tax, they agree to extend their retirement age. And when you look at the numbers on this, based upon the proposal that I've shared with Bloomberg's and others, this would free up another $15 to $20 trillion in savings for the federal government, which could, a large portion of that could be used to provide additional stimulus, extended unemployment benefits, stimulus checks, and even an extremely large infrastructure program like $3 trillion. A $3 trillion infrastructure program would not only help get the economy going again, but since state and local governments basically spend most of the infrastructure money, it would help shore up the state and local finances without having the administration to have to compromise on their tough position in terms of helping state and local government.